Back stocks edging higher to kick off the final week of the year. The S&P 500 notching its longest weekly winning streak in 6 years on Friday. Joining us now, Strategic Wealth Partner CEO Mark Tepper. Mark, good to see you. All right, you've got a saying that I'm interested in. You say, don't cheer the cuts next year, fear them. Lots of rhyming going on there, but totally counter to the market. What are you talking about?
Yeah, so look, I mean, obviously investors are super pumped up, super excited about the possibility of the Fed cutting rates next year because we heard Jay Powell just a week or two ago kind of, pursue that dovish pivot and say that there may be 75 basis points of cuts that happen at the end of 2024. The market, however, obviously thinks there's going to be more than that. But, investors are so dead set and focused on easy money, low interest rates that they think that this is a good thing for their investments. But it turns out it's actually not good at all. So you want to fear the cut because from the time the Fed cuts rates for the first time, the market doesn't go up. It draws down, and it draws down on average 27% from the time of that first cut. So if that first cut does come in March, like the bond market's predicting right now, this rally can continue up until about March, and then you got to worry about a pretty nasty drawdown once they begin cutting.
Okay, but that gives us some time. So looking ahead to March, what are your top picks for at least the start of 2024?
Yeah, so look, one of the great things about the month of December typically is it kind of starts to give us some clues as to where market leadership's going to be kind of going into next year. And what we've seen over the last 30 days is we've seen less of the Magnificent Seven. We've seen more of the average stock, more small caps outperforming, more dividend payers starting to outperform after lagging all year. And our strategy right now is we're going to focus on more of this year's laggards playing catch up as we head into next year. So two areas that I like in particular. Number one, medical devices. So you look at companies like Edwards Lifesciences or Medtronic. They've been acting all year like Ozempic is going to completely change the world. No one's going to have heart issues anymore. No one's going to need any neuroscience products or anything like that. So those have kind of been left for dead all year. They've started to outperform. And then you look at investment banks like Goldman Sachs and Lazard. M&A has been an absolute graveyard this year. Essentially, no deals have been getting done because there's been no visibility on the economy and interest rates. That is now changing. I think you see a pickup in M&A next year.
Real quick, Mark, yes or no answer, basically. When you look at AI, it's run so far, so fast going into the end of the year. In the first half of the year, would you be touching any of these names?
Well, we own NVIDIA, we own AMD, we own Microsoft. So we own a lot of those big names. We are underweight, though, a lot of those AI plays because they're up 100, 200%.
Okay.
Mark Tepper. Don't cheer the cut, fear the cut. I'm not going to forget that one. He says trade on it.
Don't cheer it, fear it.
Good to see you, sir. Thanks for your time today.
Fear it, buddy. Take care.